The current live price for Envirotech Vehicles Inc., trading under the ticker EVTV on the NASDAQ, is $0.59 marking a massive intraday jump of $0.21, or about 53.55% as of this moment on Tuesday, January 6, 2026. While the broader markets are digesting typical early-year volatility, this microcap has suddenly grabbed the spotlight with a level of volume and price action that suggests something fundamental is shifting under the hood. You might see a 50% move and think it's just another penny stock pump, but the reality is much more complex. Behind this spike is a dramatic pivot from a struggling electric vehicle manufacturer into an ambitious artificial intelligence infrastructure play. The gap between what investors expected, a slow decline for a small EV maker, and the reality of this total business transformation is exactly why the stock is behaving so erratically today. Let's talk about that expectation for a second. If you've been following the EV space, you know that the smaller players have been getting crushed. While everyone looks at Tesla stock or Apple stock for direction, the microcap world has been a graveyard of broken dreams. Most people expected EVTV to continue its downward trend toward delisting, but the reality we're seeing today is the announcement of an amended and restated letter of intent to acquire 100% of AZIO AI Corporation. This is not just a side project. It is a proposed statutory merger that values AZIO at roughly $480 million and uses a reference value of $3 per share for EVTV. When you compare that $3 reference value to the price it was trading at yesterday, well under 50 cents, you start to understand why the market is scrambling to reprice this thing in real time. This move is essentially a total reboot of the company's identity. The plan is to move from building electric trucks and vans to providing high-performance computing and AI infrastructure. It's a bold bet that the market cares way more about GPU clusters and data centers right now than it does about last-mile delivery vehicles. This is where the tension lies. Is this a legitimate transition or a desperate attempt to catch the latest trend? For those of us looking at the charts, the trading volume today is the highest it has been in months, showing that institutional eyes are starting to peek at what used to be a forgotten ticker. We are seeing a massive tug of war between short sellers covering their positions and new speculative buyers trying to front-run a deal that could fundamentally change the company's valuation. The intraday movement has been a wild ride. After the news broke, we saw the stock test levels near $0.80 before cooling off slightly to where it sits now. This kind of volatility is typical when a company suggests its shares are worth $3 in a merger deal, while the public market is still figuring out if the deal will actually close. If you're using platforms like Interactive Brokers or looking for investment help on various investing sites, you'll notice the bid-ask spread is wide and the risk is high. This is the definition of a high-conviction, high-risk trade. The market is currently pricing in a lot of skepticism. If everyone believed the $3 figure, the stock would be much higher. The reality is that letters of intent are non-binding, and there are a lot of hoops to jump through, including shareholder approval and independent valuations. If you've been following the sector, you know that the move from hardware to software or infrastructure is a common tactic for companies nearing the end of their rope. However, EVTV is bringing in a new leadership team as part of this deal, including AZIO CEO Chris Young, who is slated to take the top spot. This suggests a change in the very DNA of the firm. While people are busy trading NVIDIA stock for the 100th time this week, these small-cap rotations are where the real drama happens. The question for anyone holding shares or looking at an individual brokerage account is whether the upside of an AI infrastructure platform justifies the massive risks associated with a company that was recently struggling to maintain its market cap. Recent stock movement has been driven almost entirely by this news cycle, but we have to look at the macroeconomic pressure too. Small caps are incredibly sensitive to interest rate expectations. If the Fed stays hawkish, these speculative plays find it harder to get the financing they need to bridge the gap between a signed letter of intent and a finished merger. Institutional activity in EVTV has been minimal until today, which means the current price action is largely driven by retail traders and high-frequency algorithms reacting to the headline. You won't find this discussed much on the standard Fidelity Wealth Management or Schwab Intelligent Portfolios lists because the market cap is still so small, making it a hidden story for most of the investing public. Before this pivot, Envirotech Vehicles was primarily known for its Class 4 and Class 5 electric commercial vehicles. They had a factory in Arkansas and were trying to carve out a niche in the logistics and delivery market. They even had some decent wins, like orders for electric buses in New Jersey and contracts for isolation gowns during the pandemic through a subsidiary. But the reality of the EV business is that it's incredibly capital-intensive. Manufacturing vehicles requires massive amounts of cash, and for a microcap, that often means constant dilution for shareholders. The market had basically given up on the EV story for them, which is why the stock had fallen over 90% from its previous highs. Now, contrast that with the new business model. AZIO is focused on high-performance computing, modular data centers, and sovereign AI compute. It's a completely different world. It's the difference between building a delivery van and building the brain of a global data network. If the merger goes through, EVTV effectively becomes a shell for a much larger, more modern technology business. This is why the expectations were so low and why the reality of this announcement has caused this massive intraday surge. I want to hear from you on this transition. It's one of the more extreme pivots we have seen recently. Comment below if you are currently holding any shares of EVTV or if you have traded it in the past. Do you think shifting from electric trucks to AI infrastructure is a genius move or a sign of a company just trying to survive? When you look at the self-investing landscape today, whether you're using the Robinhood app or the Fidelity trading platform, it's easy to get distracted by the big names, but stocks like EVTV remind us that the market is always looking for the next thing. The current price of $0.59 is a reflection of intense speculation. If the deal for AZIO proceeds, the reference value of $3 acts like a North Star for the bulls. But if the deal falls apart, the floor could be very far down. The institutional ownership is currently low, around 2%, meaning the heavy hitters haven't fully committed to this new narrative yet. They are likely waiting for the definitive agreement and the independent valuation mentioned in the press release. Looking forward, the catalysts are clear. We need to see the non-binding status of this LOI turn into a binding definitive agreement. We also need to see if the company can maintain its NASDAQ listing, which has been a struggle in the past due to price requirements. The upcoming annual meeting, which was previously adjourned for a lack of quorum, will be a major event to watch on January 20th. Shareholders will have a lot of questions about this new direction. If the leadership can paint a convincing picture of how they will compete in the crowded AI infrastructure space, we could see another leg up. The risks, however, are just as significant. The company has a history of high cash burn and limited runway. Even with a pivot to AI, they still need to fund operations and build out these data centers. Investors using a SoFi active investing account or Interactive Brokers platform should be wary of the potential for a sell the news event once the initial excitement fades. Small cap stocks that jump 50% in a day often face heavy profit taking in the subsequent sessions. The reality of the execution is always much harder than the expectation created by a press release. In terms of sector momentum, the AI trade is the dominant theme in the market. While people look for investment help with their long-term portfolios, the short-term traders are chasing these small-cap transformations. We are seeing a lot of interest in anything related to data centers and high-performance computing. If EVTV can successfully position itself as a provider of sovereign AI, meaning AI infrastructure for specific governments or regions, they might find a niche that the giants like Microsoft or Google aren't focusing on. It's a specialized angle that could give them a fighting chance despite their small size. As we wrap this up, let's look back at the central conflict. The market expected a dying EV company, but the reality is an entity attempting to reborn itself as an AI powerhouse. The $0.59 price point we are seeing right now is the market's way of saying, "Show me more." It's a massive vote of confidence compared to yesterday, but it's still a long way from the $3 valuation the board is targeting. This gap is where the opportunity and the danger live. If you are looking to invest online or manage your individual brokerage account, keep a very close eye on the volume and the upcoming SEC filings. The story of Envirotech Vehicles has completely changed